Hey, Bill O'Reilly here. Some people call me a trailblazing journalist. Okay, I never say that, but they can. Best-selling author, yeah. Host of the No Spin News on BillO'Reilly.com, where we cut through the noise, keep you informed on the biggest challenges facing our country today. Yeah, I'm doing that. So I've been telling you the truth for decades, and I've really been more concerned. Luckily, I'm here to tell you things you can do right now to protect your personal and financial freedom, starting with today's webinar, Gold and Silver 101, with Machi Block, Senior Director of American Hartford Gold, the only precious metal dealer I trust. They've been with us for years. So as most of you know, these days we're up against some challenging factors. Inflation back on the rise, national debt crisis, and conflicts raging around the globe. All the while, anti-West forces are aligning to dethrone the dollar, overthrow America's role in the world. So I hope you're ready for some exciting and valuable insights, because today's webinar is all about securing your retirement savings in these wild economic times with physical and gold, silver, okay? Whether you're a seasoned pro or just dipping your toes into the water, American Hartford Gold has something for you. During today's session, Machi will dive into how physical precious metals can be a financial safety net. You will learn why they're a must-have in a well-rounded retirement portfolio, and discover how easy it is to get started. We'll hear about the latest news and trends impacting gold and retirement planning. Plus, we'll get to know more about American Hartford Gold and how they can help design a personalized solution to secure your financial future. And if you stick around till the end, you'll find out how to qualify for up to $15,000 in free silver on your first order. So let's get started. Now, let's hear from Senior Director of American Hartford Gold, Machi Block.
Well, hi, everybody. Thank you for joining us on today's webinar. And Bill, appreciate the introduction. I certainly would call you a trailblazing journalist, and we appreciate the voice that you've created in the industry. I'm Machi Block, Senior Director at American Hartford Gold. And look, guys, for almost 2 decades, we've been helping Americans like you and I protect our retirement savings and our portfolios with physical gold and silver. And I'm so glad that you're joining us here today. In our opinion, there's never been a more important time in history than right now to learn how to secure your future with precious metals. And what a wild time that we're going through. We're 2 months into Trump's presidency, and we're seeing tremendous changes in the economy, the markets, and the overall sentiment. And so look, let's get settled here, let some people filter in, and then we're going to discuss what's going on in the economy, how gold is responding, what the outlooks are for this year, and then, of course, how to invest into precious metals with American Hartford Gold. And before I do that, before we get into the meat of today's webinar, again, I want to let some people get caught up here and filter into the chat. But why don't you guys let me know where you're watching from? And then just a quick yes or no if you already own some precious metals, or let us know if this is your first time looking into it. You know, it's always good to see who's joining us and where you're joining us from. Also, feel free to throw out any questions or topics that you hope that I'm going to cover. And keep in mind that we have the main group chat, and then we also have breakaway chats. And so if your question is a little bit more specific or needs a more in-depth answer, one of our team members might pull you into a personal chat to address it with you. And then, of course, all of our account executives are standing by the phones right now. And so if you get to a point in this presentation and you just want to jump straight into a call and get your questions answered, you can always call in at the number on the screen. And we're looking forward to working with you guys here and, of course, getting you a little bit of education. So look, in this webinar today, we're going to cover what's new in the U.S. economy since Trump took office, the driving factors for gold and silver, why gold and who gold is right for. And, you know, I may say gold, but I mean precious metals as a whole, and how it works to invest with us, why American Hartford Gold, what really makes us stand out in the industry as the leader in precious metals for the U.S., and then some common questions that clients typically have, okay? It's good to see you guys. Thank you for writing in the chat there. Look, right now, we're facing stagflation. Our economy is headed towards a recession, and that's all but being admitted by the Trump administration and Trump himself. We've got this tariff trade war kicking off, government shakeup with firings and funding freezes, and the largest stock market bubble in history that is showing tremendous volatility right now. I'm sure we're all seeing that in our portfolios. And Americans, here's the issue. We're facing record amounts of private debt, with credit card debt topping over $1 trillion for the first time in history. Now, gold is currently at new all-time highs, has been reaching that fairly consistently last year and this year already. Central banks are buying gold at record rates, and guess what? They're eyeing silver next. We have $9.3 trillion in government debt that's needing to be reissued and restructured this year, while the government faces a debt crisis that could potentially bankrupt our country. And of course, the political climate is anything but calm and serene. And so we're going to get into all of this and talk about it in detail. But again, look, it's no surprise to any of you that we've been in a prolonged recession and we're just kicking the can down the road. The US is experiencing stagflation right now. That's slowed growth and it's higher prices. And of course, that's exactly what the tariffs are doing, is they're slowing growth down, and we're seeing the prices begin to raise across the board. And the one thing that has really kept us from a deep recession over the last year or 2 years has been government spending and hiring. Now, however, with the Trump administration taking office and Doge creating havoc in DC, we're slashing government spending and government jobs as well, and we're taking away the lifeblood that has really staved off that recession so far. We're currently in the largest bubble in history across multiple asset classes, including the stock market, which is the most overvalued it's been since 1929, right before the Great Depression. And we're in a very, very fragile economy. Now, many investors were hopeful that Trump getting in would mean a focus on the stock market, just like his first term, and a focus on the economy, keeping that growth going. But so far, what we're seeing is a major shakeup, which has caught analysts and economists by surprise and could very well be intentional from Trump. So let me lay this out for you really briefly before we jump into a more in-depth look at each of these factors. Many economists are fearing that the stock market is unsustainably high at levels that are due for a significant crash and correction. Trump inherited an economy from the Biden administration that was admittedly on life support and sustained mostly by government spending and government hiring. Our government debt soared past $36 trillion. We had a $2 trillion a year deficit. And right now, a massive $9.3 trillion of that debt is maturing in 2025, and it must be reissued at higher interest rates where we're currently at, which would, of course, cripple our nation. Now, Trump wants to reissue that debt at cheaper interest rates, not at the current levels, which would really cripple the nation, but he wants to do it at a lower rate, as well as have the Fed cut rates to stimulate private sector growth. But the Fed has said they can't do that while they're battling inflation and while asset valuations are at too high of levels. And so Trump is most likely trying to intentionally crash the stock market in order to bring valuations back down to earth, cause a recession, whether mild or a little bit more dramatic, and push investors into treasury bonds, which are typically a conservative play. And that would cause bond prices to rise, but bond yields to drop because there's more demand on them, so they can issue them at a lower yield. And this allows the Fed to cut interest rates, reissue American debt or bonds at lower bond yields, and this saves America from bankruptcy and further financial hardship. Meanwhile, Trump is cutting jobs and federal funding, he's deporting illegal immigrants, and he's getting the economy to run more streamlined, but ultimately that's hurting housing, money, jobs, growth, etc. And he's putting tariffs on Canada, Mexico, China, and the EU, and he's causing a trade war, which is crashing markets, stagnating growth so far, but ultimately trying to bring jobs and investments back into the US. Then he's going to want to weaken the US dollar with rate cuts and federal printing to stimulate the US economic growth. But a weak dollar, remember, is very good for exports. And so ultimately, this will cause inflation, but that allows the US to tackle that $36 trillion of debt. Inflation is really a government's best friend. So all of this is very good news for gold and silver, But unfortunately, Americans are going to have to go through a period of significant volatility, which we're already seeing, and that pain in the short term to see this play out. But the thing is, Trump doesn't care. And so that's the setup. Now, if you're like many of our clients, you're seeing the warning signs flashing in the economy that things are changing. And there's a lot of concern about portfolios taking huge hits and great losses in purchasing power of the US dollar. And that's why our clients are looking to precious metals to hedge against their fears in the coming market conditions. So look, many of our clients have never bought gold and silver before. It's their first time. This might be your first time. And I'm going to give you a good idea of how that works, as well as the confidence to make a move with American Hartford Gold. Remember, our job here is to make this as simple and as easy as possible for you to get into gold and silver. You can do a cash investment where we ship gold right to your door, or if you have an IRA or an employer-sponsored retirement plan like a 401k, you can put physical gold and silver into a retirement account as well. And again, our account executives are on standby right now to help if at any point in time in this presentation you want to just jump on the line with a dedicated account executive and cut right to the details that you're most interested in. You can call us at 866-607-2447 or text webinar to 65532. And I would encourage you, if your gut is telling you it's time, then your timing and intuition are spot on. So now let's talk about each individual piece of the economy and why gold. First, we're going to talk about the failing US dollar. We have inflation that is actually on the rise. Now, recently, we got a little bit of relief, a light relief in inflation in the short term, but the overall perspective is that economists are saying inflation is going back up. It's worth noting that Trump's tariffs will most likely cause inflation and create a substantial rise in prices on many necessary items, at least in the short term. And that's why BlackRock's Larry Fink sees inflation back up at 7% and says get ready for more inflation over the next 6 to 9 months. US consumers are actually believing that inflation is on the rise to about 6% and beyond over the next 12 months. And look, if the Fed cuts interest rates, which is what Trump wants, Trump will want money to flow in order to prop up the asset values and re-stimulate the economy. This causes further inflation. Additionally, if we become an exporting nation, we need a weaker dollar. This is done by lowering rates and money printing. Think back to the 1970s and 80s where we had stagflation. There were multiple waves of inflation. In fact, 3 of them, and each wave consecutively was bigger than the last. And many are concerned that we're repeating that exact same process. We could be entering into a state of permanent inflation, and we do need inflation in order to deal with that $36 trillion of debt. Look, we currently have $36 trillion of government debt. We're expected to break $54 trillion within a decade. That is an unfathomable amount. Interest right now is the 3rd largest outlay in our federal budget. It's costing us over $1 trillion annually, and that debt burden could trigger a fiscal crisis as early as next year. We would enter into what's called a death spiral, which is where borrowing happens just to pay the interest, and it pushes us further into debt, and we keep borrowing to pay the interest on that bigger debt, and we keep doing that until we go down and down and down, and the economy just implodes. Exploding debt right now results in skyrocketing inflation, a weaker dollar, drastic cuts to essential government services, and runaway debt leads to higher interest rates because there's no confidence for people to buy our debt. And so we have to issue that debt at higher and higher rates, and eventually no foreign investors will buy that debt and the government goes bankrupt. So why gold? Look, gold goes up against a failing dollar. Inflation is actually very good for gold and silver. Gold retains value and it acts as a hedge against inflation and currency devaluation. There's no confidence in fiat currency. That's declining, and it makes gold a stable store of wealth. You know, it's typically at this part of the conversation that people think back to the Weimar Republic, where people are wheelbarrowing buckets full of cash because that money is not worth anything. That purchasing power just goes down and down and down. Currency collapses happen all the time. We look at Venezuela, Lebanon. Gold isn't just valued in one currency. It transcends any one disaster, and it's not anybody's liability. So we lean on gold to protect and preserve our purchasing power. Okay. Ray Dalio, billionaire investor, one of the largest hedge funds in the world. He says you don't own enough gold. If you don't own gold, you know neither history nor economics. Ray Dalio believes that gold deserves a significant portion of your portfolio as the value of the dollar continues to depreciate. So, worth noting. Now, let's talk about the stock market. The stock market, we're currently dealing with the most overvalued S&P 500 that the US has seen since 1929, right before the Great Depression. And that is a very concerning statement. And when we see Warren Buffett that he's sitting on $1/3 trillion of cash right now, he's saying there's just absolutely nothing worth buying in the market at these levels. That really should tell us a lot. That says something that we should pay attention to. And following great optimism, the AI hype, over-reliance on the Magnificent Seven, and bias towards index fund purchasing, regardless of its intrinsic value, we're recently seeing a major shakeup to the market, which feels like it could just be the tip of the iceberg. The NASDAQ just recorded the worst day since 2020. The Dow is down 800 to 900 points every other day right now, and gold keeps moving up higher. And so I want to give you the definition really quick of what a bubble is, because that's what we're experiencing. Howard Marks, co-founder of Oak Tree Capital, defines a bubble as the following. He says, the stock market bubble manifests as a temporary mania fueled by irrational exuberance, blind adoration of companies, and an overwhelming fear of missing out. The conviction that stocks are impervious to overvaluation leads to the belief that there's no price too high. Now, I want to ask you, does that sound familiar? Does that feel like what we just went through? And we're currently seeing that bubble begin to pop. We have to ask ourselves, is there more downside yet to come? We're entering into a very risk-off period in the markets where people, investors, institutions, they're pulling out of crypto and stocks, and they're beginning to see those markets fall and look a lot less desirable. And in fact, we're currently having the greatest number of puts, which is a short on the market, a belief that the market will drop. So hedge funds and smart money have billions of dollars against the stock market for Trump's term so far. Investors placed 10 times more shorts on the market than longs in January alone, and that trend is continuing. And this is a major turnaround in sentiment. We just had the NASDAQ's worst drop in the start of March since 2022, $1.7 trillion wiped out of the US market in a day. Many large cap stocks are down 30% so far, with more pain, doom, and gloom likely to come. And markets went from being all in on the Magnificent Seven to a complete rush to the sidelines with panic selling ensuing. Again, we're seeing all that playing out. Now, here's what's really important. Jamie Dimon, CEO of JP Morgan Chase, he sold 800,000 shares of JP Morgan for only the second time selling ever. His buying of JP Morgan has typically been a leading indicator of a healthy and a bull market. But he's not done selling right now. He's selling a total of 1 million shares by August 1st. And so the fact that that is his sentiment, that is his belief in the market, again, that should tell us the same thing that Warren Buffett is telling us. How much more pain is yet to come? Now, currently, right now, the S&P 500 is entering into correction territory. The NASDAQ is officially in correction territory as well. And gold prices, again, are up over 50% just in the last 13 months. And so to put it straightforward for you guys, tariffs are causing the markets to crash. We're at a risk of slower pace of growth in the US economy, and Trump made it clear in an interview just recently that he's really willing to weather that market downturn in order to obtain his policy objectives, which of course lowering interest rates, lowering inflation, and reducing US trade deficits, because Trump believes that this will ultimately be a net benefit to the US over time. But he's willing to put us through that economic pain in order to see his vision come to fruition. And this is in very sharp contrast to Trump's first presidency, where he would do anything to support asset prices, but effectively short-term pain for a long-term gain is okay in his mind. How much short-term pain can we take right now before we see the economy turn around to see profitability? And remember, these factories, this manufacturing that he wants to bring back into the US, they don't get built in a day. They take years, and workers don't get trained overnight. So again, how long until this whole situation turns itself around? And don't forget, Goldman Sachs, they released a report saying that there's going to be a lost decade in the stock market, that once the market actually drops, the returns over the next 10 years in the market are likely to be around 1 to 3%. That is incredibly different from what we just went through. Now, Kim Carson, he's a strategist. He correctly predicted that with Trump getting elected, there'd be a bump in the market, but he actually predicted to the day that that bump would end. He's now saying that stock markets could face a sell-off of as much as 40% over the next year or so. And so why gold? Look, investors tend to lose confidence in the stock market and they look for safe haven options. As our portfolios fall, we usually would run to bonds, which would be a typical go-to, but the bond market is getting pummeled as well. And keep in mind that bonds are nothing more than debt. And in this environment, many investors are weary about taking on that risk. And that's why we see individuals and institutions really beginning to wake up towards gold as gold starts to run up and hit new levels. And next we have recession. Trump, if he's telling us anything, it's that he's willing to put the US economy into temporary pain in the near term in order to accomplish his long-term goals, as we just mentioned here. So asked directly about this in an interview, Trump says, I wouldn't rule out a recession. In fact, he said, we need to go through a period of transition. You can't really watch the stock market. He says, China thinks in periods of 100 years. We in America tend to think just in terms of yearly quarters. You can't do that right now. It's not going to look great. And then Scott Bessent, who's the Secretary of Treasury, he said, we're going to have to go through a detox period for the American economy, and we need to brace for economic pain. He said, we could be seeing that this economy that we've inherited is starting to roll a bit. And look, there's going to be a natural adjustment to move away from public spending to private spending. And the markets and the economy have become hooked. And we become addicted to this government spending, and there's going to be a detox period. There's going to be pain. And so the heads of states are telling us to prepare, and that's something we really ought to listen to. You know, it's going to take a little time before America sees the payoff, but how long? How long can we stay in that risk? And so we see that shaky consumer confidence, declining home sales, slowing business activity is causing the stock market to begin to crash, and tremendous volatility is appearing on the markets lately. Government spending and job growth, again, have been the only things fueling the economy, and Doge's cuts are going to be felt. The Fed is concerned that the Trump policies will slow economic growth, raise unemployment, and in fact, the Fed is actually predicting a negative 1.5% for GDP for the first quarter. And previously, they were actually predicting 3.9% to the positive side. That's a huge shift. And the reality is starting to catch up to us. 61% of CEOs are expecting a recession in the next 6 months. And this can become a self-fulfilling prophecy as they cut back spending, hiring, and they really prepare for those expectations. That does push the economy into slower growth. Now, personal debt is also contributing to these recession concerns. We have astronomical private debt in America right now, with Americans having over $1 trillion in credit card debt for the first time in history. Worries among Americans that their household financial situations would deteriorate actually rose pretty considerably in February, and that's according to the Federal Reserve Bank of New York and a survey that they did. Consumers are defaulting on auto loans at record rates, and Americans are falling behind on debt payments. That's a signal of recession. Now, rising consumer debt, which the total household debt stood at $17.7 trillion as of the first quarter of last year. It's up $3.5 trillion since just before the pandemic. Mortgage debt, auto loans, credit card debt, that's all seen significant increases, and there's declining household savings at the same time. The household savings rate has actually dropped to a near record low of just 3.6%. Excess savings from the pandemic era, they're gone, right? They're expected to run out. And credit card delinquencies in the first quarter of last year topped 10% for the first time in over a decade. And so this is described as the proverbial canary in the coal mine for household financial stress. So look, it's worth noting that the lower and middle class have already been hit with savings depleting, debt, delinquencies. But here's the thing, with the stock market beginning to drop, affluent Americans on that higher upper class, they're beginning to feel that pain as well, and they're slowing down their spending. And that will be a major trigger point for recession. But here's the thing, the White House seems to want a recession quickly. They bring down the economy, they reset it, and they still get to blame the economy on the Biden administration. It works out for them. But that's all the more reason to maybe look at getting a hedge earlier on. So traditionally, look, in times of recession, that's when gold and silver experience their biggest growth. There's still lots of runway ahead. And I want to make this note that gold ETF, so paper gold, saw its largest single day inflow in history of $1.9 billion right at the end of February. This is a very good indicator that investors are waking up to gold as a mainstream hedge. That's just something we haven't quite seen yet. And so this is very good news for where gold is heading. Okay, it's also beginning to be incredibly strong demand across the board from both individuals and institutions. And guys, I'm covering a lot of ground here again, and I want to get into the rest of the details. There's still a few more economic points to talk about. But as we go through this, again, if you're concerned about how the economy is shaping up, you're already convinced that you want to get into precious metals rather than just having an abundance of dollar-based assets or all of your money exposed to the markets right now, call us or text us at any point just to get into the details a little bit quicker with a dedicated account executive. So call us at 866-607-2447 or text webinar to 65532 and we will reach out to you. Okay. Now let's get back into it. The next thing that I really want to talk about here is going to be tariffs and the trade war. Trump has raised tariffs to their highest level since the 1940s. He's got this vision. He's focusing right now on Canada, Mexico, China, and the EU. And he's put a 1-month pause on tariffs to Canada and Mexico on most goods, but those are going to resume April 2nd. And he's saying that reciprocal tariffs are going to ensue on almost all imports. We have 25% tariffs on Canada and Mexico and 20% on China. Tariffs right now are causing jitters in the economy. They're raising prices, they're raising costs to businesses, they're causing layoffs and stagnation. Now, consumer sentiment has just dropped off a cliff. The belief that there will be fewer jobs in 6 months from now is at its highest level in decades. And JP Morgan says that the US-China trade war will escalate and the bar is too high for a truce. So that means that there's more pain up ahead. We're going to be in this stalemate. After the tariff fight with Canada and Mexico, Trump's next target, of course, is Europe. And markets are whipsawing back and forth with Trump threatening new tariffs on Canada almost every other day. Now, worth noting again is China says it's ready to fight any type of war with the US, be it a trade war, a tariff war, or a fighting war, and they will fight us until the end. In just a month, Trump has imposed sweeping 20% tariffs on Chinese imports, and Beijing retaliated and added 15% tariffs on various US goods, as well as export restrictions to the US. Now, this trade war is causing stagflation, higher prices, fewer sales. Okay, the dollar is dropping because of the trade war. The US has really enjoyed a luxury that no other country has. Everybody uses the dollar for conducting trade internationally, which has made the US dollar in demand through thick and thin, no matter what we go through. Even as the federal government has run up a massive amount of debt, the world still is stuck on the dollar. But here's the thing, Trump's tariffs and his apparent breach with Europe on military matters could threaten that status. The world seems to be walking away from the US dollar in ways that we have never seen before. This causing further de-dollarization around the globe. And it's worth noting that the BRICS nations, Brazil, Russia, India, China, South Africa, and over 50 of the world's largest emerging economies are all banding together to challenge Western dominance and peel away from the US dollar. This can have huge implications for the dollar in the near future. And keep in mind that these countries' central banks have been loading up on gold over the last handful of years. Gold buying has been very strong in the East, with China and India picking it up. But now the Western world is also beginning to wake up and see a revival in interest in buying. And that is huge for gold. Look, if you and I own the one asset that the governments are fighting over, that's typically going to be a very winning investment for us. Recently, the US has been importing gold as well. We're seeing that the US is clearly focusing on gold buying, and we've seen $30.4 billion of imports of gold just in January of 2025. Now, double the amount seen during the 2020 pandemic. U.S. trade deficits with Switzerland has reached a record $22 billion, which suggests that actually a majority of the imported gold is coming from Swiss vaults. This is huge. Physical gold buying is incredibly strong right now. Now, Scott Bessent, the U.S. Secretary of Treasury, has said that gold is his single biggest holding in his portfolio. He said that we're in a long-term bull market for gold. We're seeing reserve accumulation from central banks. And he also noted that the Central Bank of Poland is taking gold to 20% of their reserves. That's huge. How many more countries in the Western world are following suit? Ever since the U.S. weaponized the dollar against Russia, there's been a 5-fold increase in buying from central banks. And nobody has been as aggressive as China up until this point, and they're actually ramping up their gold buying even still. Now, another side note to talk about, there's the London Bullion Market Association, the LBMA, based out of London, one of the major 3 exchanges for precious metals, specifically gold. There is a major shortage, an unprecedented level of gold coming out of that exchange to the point that they have actually run out of gold and had to start borrowing from central banks. Delivery, which typically takes 2 to 3 days, has gone to 4 to 8 weeks. It's unbelievable what's actually happening here. People and institutions cannot get their hand on that gold because so much has been shipped to New York and to China. And so there's this rush on gold. And so what's really going on with this? We want to audit Fort Knox and see if America really has the gold in there. Maybe we do, maybe we don't. That's yet to be seen. There's talk about potentially repricing the gold that we do hold. Central banks across the globe are needing higher gold prices. They want to repair their balance sheets with everything that's been going on. And I want you to think about this. All of the gold that's held through central banks across the globe at $3,000 an ounce is valued at just $3 trillion. That's it. That's the valuation of gold held across the globe right now. That's roughly the market cap of Microsoft. This is a ridiculous valuation if you think about it. This is the value of the commodity that's propping up central banks and economies around the globe, supporting governments. And it shows you just how ridiculously low gold is priced right now. And gold is only 0.5% of financial assets held by investors. And yet gold is already up 10% this year and 27% last year. Imagine as money starts to flow into gold and that 0.5% begins to increase, how much money will flow into precious metals. And look, since we came off the gold standard in 1971, gold has grown 84 times and the dollar has lost 99% of its value. These are stats that are worth noting as an investor. And look, I also want to talk about silver. Okay, silver is not just a precious metal, but it's also an industrial metal. And for 3 years in a row, silver's demand has outstripped its supply significantly. 60% of silver's usage per year is just for industrial use. And that demand is actually set to double over the next 10 years. This is really offering a very easy entry point into precious metals because gold has been moving, even though there's still great runway. Silver has yet to grow, and there's such a tremendous entry point into it right now. Now, it's really the cornerstone of renewable energy sector as well, including solar, electric vehicles, robotics, space race. And that supply on silver is not keeping up with demand. We're experiencing a 200 million ounce per year deficit, and mining really isn't increasing the supply. Mining is getting more and more expensive with inflation going up, of course, and that pricing on silver then must go up as well. And here's the thing, the US imports over 80% of its silver. Our above ground reserves of silver are set to deplete in the next 2 years at the pace that we're going. Silver was up about 46% in 2024. Analysts at UBS see silver outperforming gold over the next 12 months. Citi and UBS see silver somewhere around $40 to $50 an ounce conservatively. And silver is really on the brink of a historic breakout. It's trading at $33 an ounce with projections hitting $50 by mid-year. With rising demand, supply constraints, and global uncertainty, silver appears primed for a major surge, potentially making it one of the most explosive asset classes over the next decade. And governments and central banks are taking an increased interest in silver. They're recognizing its strategic importance in the global economy. Unlike gold, which has long been a staple of central bank reserves, silver is just now drawing the attention as a critical asset for both monetary and industrial purposes, and central banks are eyeing silver for their reserves. Governments are also stockpiling silver for industrial use because they see it as being such a critical component. Now, there's a natural ratio between gold and silver, about 16-1. 16 ounces of silver should equal 1 ounce of gold, but that ratio right now is still 90-1. Silver is incredibly undervalued. This combination of economic uncertainty, inflationary pressure, increased utility, and high-tech applications suggests that silver's breakout really is just beginning. Now look, just a couple of summary details about this. Wall Street analysts expect gold's rally to continue into 2025. We've just witnessed the biggest annual jump in 14 years. Gold beat the stock market last year 27% to 23%. And JP Morgan analysts wrote, "We maintain our multi-year bullish outlook on gold for the third year in a row," adding gold still looks well situated to hedge the elevated levels of uncertainty around the macro landscape heading into the initial stages of the Trump administration in 2025. There's also a sentiment that the U.S. retailer really didn't participate that much in 2024 with gold and silver, but if we do see an increase in stagflation or inflation, that retail interest should be very supportive to the gold prices and continue to push it up. In fact, investors are very optimistic about gold and silver for 2025 because they're so pessimistic on geopolitical and government debt. JP Morgan analysts again also expect gold prices to rise, especially if U.S. policies become more disruptive in the form of increased tariffs, elevated trade tensions, and higher risks to economic growth. All of that is being seen right now. Jamie Dimon called the U.S. stock market inflated and is cautious because of the risks from deficit spending, inflation, and geopolitical upheaval. And he's been sounding a note of caution since 2022, saying that there's a financial hurricane headed for the U.S. economy, and that storm, however, has yet to arrive. We might be seeing the wind blowing right now. U.S. global equity strategist Andrew Garthwaite says that 6 out of 7 conditions are met for a stock market bubble. And the chief of the World Trade Organization says that any tit-for-tat trade wars prompted by Trump's trade tariff threats would have catastrophic consequences for global growth, and we could see a double-digit drop in global GDP. That's catastrophic. Everyone will pay. And here's the thing, China has freed up its insurance companies to buy gold for the first time in history, and that clears the way for billions of dollars to flood into gold. In fact, about $28 billion. Bank of America is calling on gold to be a safer bet than U.S. Treasury bonds. The World Gold Council called central banks' appetite for gold insatiable. And Ed Yardeni, who is a very famous investor, expects gold to hit $4,000 an ounce in 2026. And MarketWatch is actually calling for gold to hit somewhere around $4,400 an ounce this year. And while gold historically thrives when other assets perform badly, there's a seeming contradiction of all-time high gold prices while the stock market has been booming, but it's just a lot of money looking around for a home and a lot of anxiety around those highs in the stock market. So this is very good news for gold as well. Finally, UBS says with uncertainty regarding tariffs, worries that stagflation may rear its head again and continue global conflicts, the safe haven gold is likely to benefit. Now, there's this other sense that we have been going through this period where investors have become very complacent about risk, and they've succumbed to kind of an exuberance that preceded the 2008 crash or the dot-com collapse on the stock market. There's fear that's surrendered to greed, and investors are far too complacent about the growing imbalance in U.S. asset markets. And the U.S. is actually facing the biggest fiscal sustainability problem since the Civil War, certainly quite possibly in its entire history. That's coming from Larry Sumner's. Goldman Sachs has also called attention to escalating trade tensions and concerns over the sustainability of the U.S. fiscal balance sheet that could help ignite a fire under the price of gold in the coming year. Now, there's a rally in gold prices that likely reflects a combination of rising uncertainty about U.S. policies and weaker U.S. dollar. So when we put all this together, we get a sense that gold and silver are expected to outperform in 2025 and beyond as investors are growing weary of an overvalued stock market and concerns about a coming recession and devaluing dollar. We're entering into a bull market for precious metals that while we've already seen some growth, it really feels like it's just the first or second inning out of a 9-inning game with much more room to grow. And gold and silver might be a new investment for you. Again, they tend to be new investments for a lot of our clients. As we said, a lot of retail investors are just now waking up to the concerns on the market. And so that could very well be you watching this webinar right now. Guys, it's important that you go with a trusted name in the industry that's going to take your needs seriously and get you educated properly and get to know what's important to you when they build out a portfolio of gold and silver. And so let's look at who American Hartford Gold is. Look, we're the #1 gold dealer in the US with unparalleled customer service built on trust, integrity, and transparency. We're dedicated to 100% client satisfaction. We want you to walk away better than when you found us. And look, thousands of positive 5-star reviews online on Google Trustpilot, Google Reviews, Consumer Affairs. We have an A+ rating with the Better Business Bureau, and the prestigious Inc. 5000 has given accolades to American Hartford Gold 5 years in a row. Our CEO and our president, they're featured as subject experts on Fox News, Fortune, and Newsmax. Everywhere you look, you will see American Hartford Gold. We are the nation's largest retailer of physical gold and silver. We've delivered billions of dollars worth of precious metals across the country to thousands of satisfied clients. And we're actually the only firm in the industry backed by private equity, which gives us greater liquidity for when you need to sell your gold and silver. We're fiscally sound, we're dependable, and we're better positioned when you need us. As a company, we offer the highest grade investment gold and silver, both coins and bars. We have 0 fees on a buyback commitment to you. We offer free shipping, free insurance, and also free storage for qualifying purchases. And there's a very easy, simple, tax-free, penalty-free move to roll your IRA into gold and silver. It's a 3-step enrollment process. It's straightforward, it's convenient. We'll hold your hand through the entire step. And we're also offering dedicated full-service guidance and support throughout the life of your account. And look, these are all very good bullet points that I can read off of a long list that makes American Hartford Gold #1 in America. But what really matters and what it comes down to is that you'll have exceptional experiences with us. We guarantee you'll feel more educated and more comfortable and more confident when you deal with American Hartford Gold. Our knowledgeable directors will give you a great experience for the lifetime of your account, and you're never going to be alone in getting into gold and silver or getting out of gold and silver. And so look, if you're concerned about what you're seeing in this economy and with the dollar and you're looking for a hedge, gold and silver can be a great way to diversify your portfolio. Remember that gold gives you stability. There's rising demand on it. There's scarcity. There's no counterparty risk to gold. It's an independent investment and asset. There's a very highly liquid global market, which means you can get into it, you can get out of it. And diversification is really key to protecting any portfolio value. Gold is a great hedge against inflation. It preserves your purchasing power. And of course, it's portable, it's transferable, and it's private. Remember that right now we do see gold and silver growing, but UBS has gold at $4,000 an ounce. This is just getting started. MarketWatch says gold is giving you a once-in-a-generation buying opportunity on its way to $4,400 an ounce by mid-2025. Bank of America investment strategist Jared Woodward says this is a decades-long commodity secular bull market. It's just getting started. And Bank of America investment strategist Michael Hartnett also says do what central banks are doing. Buy gold. Gold is the only asset outperforming US tech shares. Gold is outperforming tech stocks this year, and investors should keep buying. So look, a lot of information covered again, guys. We're talking about the hows and the whys of gold and what it can do to help secure your financial future. If you've liked what you've heard so far and you're ready to get started, our account executives, again, are standing by the phones, ready to help you out. Please call us with any questions at 800-607-2447. And whether you're a seasoned gold buyer or just getting started out, we'd like to help you build your precious metals portfolio. And that's why we're actually offering up to $15,000 of free silver along with qualifying purchases. So if you're interested in getting a little bit more bang for your buck, call us today, text webinar to the number, and let us walk you through what that looks like to start getting a hedge in your portfolio and getting into gold and silver. Now, how to get started, right? If you call us, we'll walk you through that. But for the rest of you on the webinar still, let's talk about the hows. One of the best things about physical gold and silver is how easy it is to get them. And there's 2 ways that we help our clients here at American Hartford Gold. One is a cash investment, where you would just start with simple cash. You would do a wire transfer or a check over to American Hartford Gold. Once we get those funds in, we would do a full consultation with you. We'll sit down, we'll get to know what's important to you, we'll build out a portfolio, and then we ship that gold and silver right to your home. It's fully insured, we cover the shipping cost, and there's no sales tax. And if you don't feel comfortable having gold at your home, you can also have it stored at a private depository. We can set that up for you. Now, the minimum purchase on gold is $5,000. Anything above that, we can help you with. We do anything from $5,000 to $50 million. It just, whatever is important to you to get protected is important for us to protect. So that's the cash side. Very simple and easy. Guaranteed good experience with us. We have the highest regard for your privacy and your security. We ship all of our precious metals in non-discrete packaging, so there's no indication of the value of the contents. Nothing says gold or silver on the box. And again, you will sign for it upon receiving it. The other way that we help our clients is through retirement accounts. So if you have an old 401k, an IRA, an employer-sponsored account, and you want to put precious metals into that instead of just stocks, bonds, equities, and the dollar, we can help you open up what's called a self-directed IRA. Now, this is the type of account that allows you to hold on to physical, tangible assets in your portfolio. So we open up this account at a company that we work with, and it's just a quick application we would do over the phone with you. You call in, we'll build that out, we'll send it over to you for a DocuSign, and our dedicated back office will do all the heavy lifting to help you roll your funds out of your current account into the new Gold IRA. Takes a couple of days to move the funds over. When that account funds, we'll give you a call. We'll go through that full consultation again, help you select the metals that you want, and we'll ship that gold and silver to a private depository. So this is a third-party vault. It's outside of the banking system. You own that gold and silver. You can access it anytime you like. It just has to be stored for you safely and securely because it's a retirement account. And it would be $225 a year for storage and custodial fees combined. Now, we'll cover the account setup and the first year of storage for you, so it's tax-free and penalty-free to move it, it's free to move it, and then you would actually own physical, tangible gold and silver in your retirement account that at any point in time you could access should you need to. So either one of those processes or both, many investors are looking at it saying the majority of my net worth is exposed in my retirement account. I want to get some hedge and diversification there. That's great. They also may have cash sitting in the bank getting eaten away to inflation, and being able to move physical cash into gold and silver is not a bad way to do it either. So whether it's one or the other, call us today. We'll talk to you about what that looks like, and we'll give you a tailored approach to what's best for your situation. And so in conclusion here, guys, we've been going for quite some time here. We've talked about why people invest into precious metals, what the economic concerns are, how gold and silver provide hedges against those factors, and we've explored where gold has been, where it is now, and where it's very likely going in the near future, and why this is such a good time to be getting into precious metals. And we've also explored how to buy gold with either cash or a retirement account. But look, a webinar is only going to be able to give you so much education. And you can only digest so much information at once. I get that. But if you feel that this is a solution that you're looking for, if your gut is telling you now is a time to make a move, I'm a little concerned about what I'm seeing, if you're asking yourself if now's the right time for you to invest, all I would encourage you to do is really ask yourself if you see things getting better or getting worse as we go forward. Do you think that we're in the clear? Do you think that a recession is still up ahead and that there's further volatility and devaluation happening as we go forward here? So if you're answering that yes, you think this is a good time to move, yes, you're concerned, give us a call today. This is a great solution for you to get a hedge and diversification. And again, we'll help show you how simple that process is. So text webinar to 65532 or call us now at 866-607-2447. Now, to everybody that's been chatting and putting messages in the group chat, if you've got your questions answered by breaking into an individual room with one of our associates, that's great. Again, if you still have questions that have not been answered or addressed, that always helps us know what subjects to cover as we go forward here. But also, I'd really just encourage you, take a moment right now, call in, get a point of contact over at American Hartford Gold, and let us walk you through getting a hedge into precious metals. Guys, I want to thank you. You've hung with me. We spent a lot of time here. My name is Machi Block with American Hartford Gold. It's a pleasure joining you today. Glad you were able to come be a part of this webinar. We'll consistently do this to give you updates in the market as things change, but you joined us for a reason. You have real concerns about what you're seeing, And again, in our opinion, there has never been a better time than right now to get into precious metals. So call us today. Let us talk through your situation with you and see what makes the most sense to get you protected.